So in first part of the video, we saw how markets and economies reacted to growth concerns, trade tension and geopolitics. And in this video, I intend to cover rest half of 2025 month-wise. Hello guys, my name is Himang and welcome to Basics with Himang. So in today's video, we will be covering three key things. First is what is the major event happened in that particular month. Second, how markets or economies reacted to that particular event. And third, what are the key lessons that we should be looking at as we move into 2026? So let's begin. So by July 2025, it became clear that interest rates would remain high for longer duration than many expected because central banks focused more on controlling inflation than supporting growth. Due to this, market became quite selective and companies with weak fundamentals they struggled. However, strong businesses held up better. So key learning from July 2025 is that in a high interest rate world, strong businesses with great fundamentals survive. So in August 2025, fresh economic data showed slowing growth in parts of Europe and China, which raised concerns about global demand. So due to this, global markets turned cautious and export-dependent sectors they faced pressure. So key learning from August 2025 is that global slowdown affects everyone. Even strong domestic market is not completely isolated. So in September 2025, investors starting re-looking at the VIX due to high valuations, global uncertainty and policy risks. So this resulted into increased volatility and investors preferred stability over aggressive growth bets. So key learning from September 2025 is that risk appetite changes in cycle because when uncertainty rises, safety becomes more valuable. So in October 2025, inflation data from several countries showed signs of cooling, which raised hopes for future rate cuts. So to this event, markets reacted positively and rate-sensitive sectors and bonds saw renewed interest. So key learning from October 2025 is that markets move ahead of reality, which means that markets react to what might happen compared to what already happened. In November 2025, global policy decisions, elections, and fiscal debate brought uncertainty back into focus. So, due to this event, market remained cautious and short-term swings increased around major announcements. So, key learning from November 2025 is that policy risk is unpredictable. That is why long-term investment horizon is preferred compared to short-term. So in December 2025, investors are now looking back at a volatile year that 2025 has been so far, and investors have started balancing their portfolios for 2026 accordingly. So with all the major events having been factored in, so markets seem stabilized, and investors are now focusing more on asset allocation rather than short-term trades. So December 2025 teaches us that year-end is all about preparation, not predictions. So if we look at all the major events happened which we discussed in this video, then few clear learnings stand out. First is interest rates change how markets behave. Second, global events impact even local investments. Third, volatility is part of investing. And fourth, expectations drive markets. So 2025 reminded us that markets are shaped by three E's. First E is events, second E is emotions, and third E is expectations. Remember guys one thing, the goal is not to predict what will happen in 2026, but to be prepared for it. Understanding events will help you stay calm, patient and disciplined no matter what markets do next. I hope after watching part 1 and part 2 of this series, you have gained some understanding as to how markets behave under different events. And I believe this learning will help you in 2026 with more financial freedom and more financial knowledge. Stay curious, keep learning, have a very great new year, and thank you for watching. And I'll see you in 2026.